$1,800 and $2,400 Social Security benefits in 2026. Official SSA payment explanation. Every recipient needs to understand this before the next scheduled deposit date. Millions of Americans currently receiving Social Security benefits are collecting less money than they are legally qualified to receive. Not because the government removed it, not because of a technical mistake, but because no one ever took the time to clearly explain how the 2026 payment structure works, who qualifies for each amount, when the funds arrive, and what actions you must complete to ensure every dollar reaches your account without delay. That changes right now. What you are about to read is not guesswork. It is not a rumor spreading online through Facebook posts. It is not clickbait written simply to attract attention while providing no real information. Every amount, every payment schedule, every qualification rule, and every action item in this report comes directly from official Social Security Administration published information, verified benefit charts, and policy records available at SSA.gov. Two numbers are at the center of everything we are discussing today: $1,800 and $2,400. By the time you finish reading, you will understand exactly what those amounts represent, which one specifically applies to your circumstances when your payment arrives according to your birthday, and the 3 steps you must complete before this weekend to protect every cent you earned. Stay with this, because the details determine the difference between collecting the money you deserve and leaving benefits unclaimed every single month throughout the rest of your retirement. Why your 2026 Social Security benefit differs from last year. Every January, the Social Security Administration recalculates payments for every person receiving benefits in the system. This yearly recalculation is called the Cost of Living Adjustment, commonly known as the COLA. The COLA is not a bonus payment. It is not a present from Congress. It is not a separate program requiring registration. It is the automatic yearly adjustment of Social Security benefits designed to maintain your buying power as consumer costs change over time. The SSA determines the COLA using the Consumer Price Index for urban wage earners and clerical workers, known as the CPIW, published by the Bureau of Labor Statistics. When inflation increases, your benefit increases alongside it. When prices remain more stable, the COLA becomes smaller. The adjustment is applied across every category of Social Security benefits at the same time, including retirement benefits, disability benefits, survivor benefits, and supplemental security income. For 2026, the Social Security Administration has implemented the COLA throughout all benefit categories. This means your monthly payment amount has changed from what it was during 2025. And if you have not checked your updated 2026 amount through your personal My Social Security account at SSA.gov, there is a strong possibility you do not know the exact amount you are now owed each month. That verification is the first action step we will explain in detail before this report ends. The $2,400 amount who qualifies for this figure. According to the Social Security Administration's officially released 2026 benefit statistics, the average Social Security retirement benefit for a retired worker following the 2026 COLA adjustment is around $2,400 per month. This is the average. It is the midpoint amount derived from the SSA's own benefit tables, representing the typical retired American worker who claim benefits at or after full retirement age, with a reasonably stable work history throughout their career. Understanding how the SSA calculates your personal benefit amount is extremely important, because this is where massive confusion regularly develops among recipients. The Social Security Administration does not issue every retired worker the exact same monthly payment. Your individual benefit is calculated using a formula based on your 35 highest earning years. With each of those years indexed to account for wage growth over time, the SSA refers to the result of this calculation as your primary insurance amount, or PIA. Your monthly benefit is determined from that PIA. Several factors directly influence where your monthly payment falls relative to the $2,400 average. Your total years worked matters substantially. If you worked fewer than 35 years, the Social Security Administration averages 0 into the formula for every missing year. A worker with 28 years of earnings history has 7 zeros included in their benefit calculation, which pulls the monthly amount significantly lower than what 35 full working years would generate. Your lifetime earnings level matters directly. Higher average earnings throughout your 35-year history produce a higher monthly payment. The SSA's benefit formula is progressive, meaning it replaces a higher percentage of lower lifetime earnings and a smaller percentage of higher lifetime earnings. But in actual dollar amounts, stronger earnings histories produce larger monthly checks. Your claiming age matters permanently. This is the factor that most directly explains why so many recipients see their benefits settling below the $2,400 average. We will explain this completely in the next section. For someone retiring at full retirement age in 2026 with a strong and stable 35-year earnings history, the maximum possible Social Security retirement benefit is around $3,800 per month. For the typical retired worker with an average earnings history claiming at full retirement age, the amount falls close to that $2,400 benchmark. The most effective action you can take to learn your exact number is to log into your My Social Security account at ssa.gov and review your personalized benefit statement. This document reflects your real indexed earnings record, your calculated primary insurance amount, and your confirmed 2026 monthly payment after the COLA adjustment has been applied. It takes less than 10 minutes, and it provides your exact amount, not an estimate, not an average. Your personal legally calculated benefit payment, the $1,800 amount, who receives this figure and why. The $1,800 monthly payment range applies to a very large and very specific group of Social Security recipients. Understanding why this amount is lower than the $2,400 average is essential because the reason is permanent, and it impacts every future COLA adjustment for the life of the benefit. The primary reason most recipients land in the $1,800 range is early claiming. The full retirement age for everyone born in 1960 or later is 67 years old. This is the age where you receive your complete calculated benefit with no reductions applied. However, the Social Security Administration allows people to begin collecting retirement benefits as early as age 62, giving workers a 5-year period of early access before reaching full retirement age. The trade-off for collecting benefits early is a permanent reduction in your monthly payment amount. The reduction is not minor. If you claim at age 62, the earliest possible age, your monthly benefit can be permanently reduced by as much as 30%. Compared to what you would have received at full retirement age, claiming at 63 results in a smaller reduction. Claiming at 64 results in a smaller reduction again, but any claiming before age 67 results in some level of permanent downward adjustment. Here is what every early claimer must understand with complete clarity. This reduction does not disappear when you turn 67. Now, reaching your full retirement age after claiming early does not restore your benefit to the full amount. The reduction becomes permanently built into your monthly payment. Future COLA adjustments are applied to your reduced base amount, meaning the difference between what you receive and what a full retirement age claimer receives grows slightly larger every year in actual dollar amounts. This permanent reduction structure is the primary reason so many early claimers see their 2026 monthly benefit landing in the $1,800 range rather than at the $2,400 average for full retirement age recipients. The $1,800 range also includes a significant percentage of SSI recipients. Supplemental Security Income is a completely different program from Social Security retirement benefits, and the distinction matters enormously for understanding your total monthly benefit picture. Social Security retirement is an all-head earned benefit. You qualify based on your work history and the payroll taxes paid on your earnings during your career. SSI is a needs-based program administered by the Social Security Administration for seniors age 65 and older, individuals who are blind, and individuals with qualifying disabilities who have limited income and limited financial resources. The maximum federal SSI benefit for 2026, as published in the SSA's yearly benefit update, is $967 per month for an individual and $450 per month for an eligible couple. These are the federal baseline amounts before any state supplements are added. The $1,800 range also includes many survivors receiving benefits based on a deceased spouse's or parent's earnings record, as well as dependents collecting under another individual's Social Security account. The specific monthly amount in these situations depends on the earnings history of the primary account holder and the relationship of the recipient to that individual. Deserve your official 2026 payment schedule according to your birthday. Knowing how much you receive is only one part of the equation. Knowing exactly when the money arrives removes unnecessary stress, prevents unnecessary calls to your bank, and helps you organize your monthly budget accurately. The Social Security Administration uses a birthday-based payment schedule for 2026 retirement benefit recipients. Your payment date is determined by the day of the month you were born. If your birthday falls between the 1st and the 10th of any month, your Social Security retirement payment arrives on the second Wednesday of that month. If your birthday falls between the 11th and the 20th of any month, your payment arrives on the Crow third Wednesday of that month. If your birthday falls between the 21st and the 31st of any month, your payment arrives on the fourth Wednesday of that month. This three-tier system applies to the majority of Social Security retirement recipients currently receiving benefits. However, there is an important exception affecting a significant number of recipients, and it is the source of major confusion online. If you started receiving Social Security benefits before May of 1997, or if you currently receive both Social Security retirement benefits and SSI at the same time, your payment schedule follows a different timeline. In this situation, your Social Security benefit arrives on the MON3 of every month, and your SSI payment arrives on the MU1st of each month. The Social Security Administration includes a protective mechanism within both schedules. When a scheduled payment date falls on a weekend or a federal holiday, the payment is moved earlier to the business day immediately before that date. This is known as an early payment, and it is a fully documented, officially confirmed practice described in the SSA's published Social Security Benefit Payment Schedule, available at ssa.gov. This early payment mechanism is responsible for much of the online conversation about checks arriving ahead of schedule or early payments being released. When recipients in online groups and comment sections describe receiving an early payment, they are almost always describing this exact situation. A payment date that moved earlier because a weekend or holiday landed on the scheduled date. It is not a special payment. It is not an extra check. It is the SSA making sure no recipient experiences a payment delay due to a non-businessiness day. Write down your exact payment date based on your birthday and your benefit category. Set a reminder on your calendar 1 week before that date, and allow your financial institution 1 to 3 complete business days to process the deposit after the SSA releases the funds. Direct deposit processing times vary between banks and credit unions. A payment released by the SSA on Wednesday may not appear fully in your available balance until Thursday or Friday, depending on your specific institution. State supplements where you live determines your total benefit. For Social Security retirement recipients, the monthly benefit amount is a federal determination. The SSA calculates your amount, and that figure remains identical regardless of the state where you live. California, Alabama, Wyoming, or any other state, the retirement benefit remains the same. SSI works very differently. While the federal government establishes the baseline SSI payment amounts, most states have created what are called state supplemental payments, or SSPs, which are added on top of the federal SSI amount for eligible recipients living in that state. The size of these state supplements varies dramatically from one state to another, and the difference can equal hundreds of dollars each month. California maintains one of the most generous state SSI supplements in the nation. SSI recipients in California can receive significantly more per month than the federal baseline because of the state supplemental payment program, potentially pushing total monthly benefits meaningfully higher than the federal caps alone would produce. New York provides a substantial state supplement, particularly for seniors living independently within the community instead of institutional settings. Alaska, because of its exceptionally high cost of living compared to the continental United States, also ranks among the highest total SSI benefit states in the country when federal and state amounts are combined. On the opposite side, states including Texas, Georgia, Mississippi, and several others currently do not provide any state supplemental payment. SSI recipients in these states receive only the federal baseline amount with no additional payment from the state. An additional complication exists in states including California and New York that manage their supplement through a state agency rather than through the federal SSA. Recipients in these states may receive two separate deposits at different times each month, one from the Federal Social Security Administration and another from the state agency handling the supplement. If you are an SSI recipient in one of these states and you are only seeing one deposit, contact your state social services office immediately to determine whether you are missing the second payment. If you are an SSI recipient and you have never verified whether your state offers a supplement, complete that research this week. Search your state name alongside the phrase SSI State Supplement 2026 to locate official state government resources. Alternatively, call the SSA's National Helpline at 800-752-12013 and ask specifically whether you are receiving the maximum total benefit federal plus state available to you based on your state of residence. Many seniors across the country are receiving less than their full entitled amount every single month simply because nobody informed them their state offers additional assistance. Defines 3 benefits. Most recipients never claim beyond your standard monthly payment. 3 additional benefits exist that huge numbers of Social Security recipients qualify for but never pursue. Each one can significantly increase your total monthly income, and each one is available to you through the standard SSA system at no cost. Benefit 1. A formal earnings record review. Your Social Security benefit is calculated from your earnings record. That record is built from decades of employer tax filings and your own tax returns. Errors happen. Employers occasionally report incorrect amounts. Years of earnings are sometimes missing completely from the record. And because your benefit calculation uses your 35 highest earning years, a single missing high income year can significantly reduce your monthly benefit moving forward. Every Social Security recipient has the legal right to request a formal review of their earnings record and the benefit calculation based on it. If a correction is justified and confirmed, the SSA adjusts your benefit amount moving forward. Requesting this review costs nothing and requires only a single phone call or a message through your My Social Security account. Benefit 2. The post-full retirement age earnings freedom. If you have reached your full retirement age and you are still working in any capacity, you can earn any amount of employment or self-employment income without any reduction to your Social Security benefit at all. This rule surprises many recipients who assume that earning income during retirement would reduce their monthly payment. Before full retirement age, the SSA applies an earnings test that can temporarily reduce your benefit if you earn above a specific yearly threshold. But the moment you pass your full retirement age, that earnings test disappears completely. You can earn $50,000 a year, $100,000 a year, or any amount without losing a single dollar of your Social Security benefit. If you are currently working and delaying Social Security claiming because you fear an earnings penalty, confirm your full retirement age immediately and verify whether that concern still applies to your situation. Benefit 3. Spousal and survivor benefits. If you are currently married, were previously married for at least 10 years before divorce, or were married to a spouse who has passed away, you may qualify for spousal or survivor benefits that significantly exceed what your own earnings record produces. Spousal benefits can reach at up to 50% of your living spouse's full retirement benefit. Survivor benefits for widows and widowers can reach at up to 100% of what the deceased spouse was receiving at the time of death. Many widows and widowers throughout the country are currently collecting benefits based only on their own earnings record when they are legally entitled to a substantially larger survivor benefit based on their deceased spouse's record. Call the SSA directly at 800-772-213 and ask a representative to review both your own record and any spousal or survivor benefit eligibility you may have. This single conversation has produced significantly higher monthly payments for countless recipients who never knew the option existed. Fraud alerts. Every recipient must understand this. Every time major Social Security benefit information spreads widely, criminal organizations immediately exploit the attention and confusion to target recipients. Protecting your benefit begins with understanding exactly what legitimate SSA communication looks like and what it does not. The Social Security Administration will never call you unexpectedly and ask you to confirm, provide, or verify your Social Security number over the phone. The SSA already has your number on file. Any caller claiming to be an SSA representative who asks for your Social Security number is a criminal. Hang up immediately and report the call to the SSA's Office of Inspector General at 1-800-26907. Also, the SSA will never demand payment using gift cards, wire transfers, prepaid debit cards, or cryptocurrency under any circumstances for any reason. These are exclusively the payment methods used by fraud operations. No legitimate federal agency will ever instruct you to settle a debt or pay a fee using any of these methods. There is no special enrollment program, no processing charge, and no activation step rate required to receive your 2026 benefit payments. Any website, email, video, or phone call claiming you must pay a fee or complete a special enrollment to unlock a larger payment is a scam. The only legitimate official source for your Social Security benefit information is NSA.gov, not SSA.net, not SSA.org, not any variation or imitation of that address. It is SSA.gov exclusively, and it is the only domain you should trust for official Social Security Administration information. DAR, your 3 action steps before this week ends. Action. Step 1. Log into or create your My Social Security account at SSA.gov. This account is free, federally protected, and the most direct way to access your personalized 2026 benefit information. Inside your account, you will find your confirmed 2026 monthly benefit amount after the COLA adjustment, your complete payment history, your full indexed earnings record, and any pending notices or required actions connected to your account. If you have not yet created an account, you will need your Social Security number, a valid email address, and your current United States mailing address to complete the setup. Once inside, verify that your 2026 benefit amount correctly reflects the COLA adjustment. If the amount appears incorrect or unexpected based on what you anticipated, document the discrepancy and contact the SSA directly to begin a review action. Step 2. Confirm your state SSI supplement status if you receive SSI. Search your state name alongside the phrase SSI State Supplement 2026, or call the SSA helpline at 1-800-772-2013 and ask specifically whether you are receiving the maximum total benefit available to you in your state. Ask this question even if you believe you already received the supplement. Benefit amounts change every year, and confirmation takes less than 5 minutes. Action. Step 3. Verify your direct deposit information and mailing address are current. Log into your My Social Security account and navigate to the Payment Information section. Confirm the bank account number and routing number on file match your current active account. If you receive a paper check, confirm your mailing address is accurate and current. If you have moved, changed banks, or opened a new account at any point during the last 12 months without updating the SSA, your payment may be delayed or sent incorrectly. This verification takes under 5 minutes and prevents payment delays that can otherwise require weeks to resolve through the SSA's correction process. Your benefits are your money. You earned every dollar the Social Security Administration owes you. Decades of work, decades of payroll tax contributions, decades spent building a career and a life with the understanding that these benefits would exist when you needed them. The 2026 benefit amounts of $1,800 and $2,400 are not gifts. They are not government charity. They are the return on a lifetime of contributions to a system you funded with every paycheck you ever earned. You deserve to receive every cent of what that system owes you on the correct date in the correct amount, with full understanding of every option available to maximize what reaches your account every month. Share this report with one person in your life who needs it. A neighbor, a sibling, a friend from your community who has been confused about their payment amount or worried their check is incorrect. One conversation inspired by this information can correct a benefit shortage that has been costing someone hundreds of dollars every month for years. Your benefits are your money. Make sure you are collecting every dollar of